Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this very active Monday, October 12th, 2020. And boy, what an interesting day. You know, a lot of traders are going to say, technicians I should say, are going to say that we ended the correction in the NASDAQ as the cash markets came back up and made a new high on the move. Now, the definition of a correction is a 10% drop from a recent high. When you're out of that correction, it is when the market exceeds the high of where that correction broke from. A bear market, a reversal from an uptrend to a bear, according to many technicians, is a 20% drop. So I wanted to give you some of the definitions, and then there's the definition how you can come out of that. You know, I get a bunch of you that write, Ira, put up more charts in this video. Not going to. Where all of the real charts are, everything I cover, and we're going to be adding some of the grayscale ETFs now that are there for the different digital currencies. That's in my subscriber videos. This is your freebie, so I'll do it as I want to help you with it. Some person asked, why didn't I come out Friday? I came out Saturday. Friday afternoons in the end of the summer, I was taking it easy. I intend on putting these out for you Friday nights again now as we get ourselves rolling, but why not? I mean, it is free, and I do it on the weekend. It was published, and my subscribers know I put out for them on the weekend as well a full, just weekly chart, buy, sell, longer term analysis. Again, the free people don't get to see all that. When we take a look at the tech stocks, we're coming up, and you know the resistance is back in this area. In this 127 area is the key. What can the market do if it makes a run at that? The trend is up, and it's been up. It's had the higher lows, the higher highs. I've clearly said that. The market has stayed over the 18-day average. It made a test of it as it pulled back here. Then it began the pattern of moving out to the upside. And then it hit, and I want to come back to this, on Friday. And again, I did publish this for you on Friday, on the weekend. And you could see that you got as high as 120.18. As far as I'm concerned, that's where the pros took money off the table. If they stayed in, they jammed their stops way up. Why? Because now that was the first hit, now you're over the upper Bollinger Band. I wouldn't give this market a lot of quarter here. I am not bearish. I don't want you to think that. But I also understand the probability of staying over a Bollinger Band that isn't just mirroring itself to the Bollinger Band top yet. It could, but it hasn't yet. This is the, how many closes did we have? Friday you closed 120.18. The Bollinger top was 120.32. Did you hit it on Friday? I want you to take a look. No. 120.21. You always got to look. You cannot go just by looking at a chart. You should hit the numbers to know it. Today is the first day the market hit the Bollinger Band, and that number that it hit it at was 122.04. As far as I'm concerned, that's where the money should have been taken, some of it at least, off and jamming stops way up, giving the market no quarter. What else happened? You had a strong Monday. When you have a strong Monday in the stock market, if you read the Stock Trader's Almanac, you will see the probabilities that you're going to get a Tuesday reversal. That is not a reversal of trend, a reversal of some of that gain. Common. Doesn't mean it has to happen, but you play the probabilities. So when I come here and I see the slow stochastics, I have a market that's got, for a change, both numbers over 80. That's day one. That's today. Yesterday, both numbers were over 80, and the day before. We have an embedded reading. It takes at least 3 to do that. That means on the pullbacks, I am looking for the pros to take money off here to have their money ready to be buying until the red line closes back under 80. SMH. This is the Gorilla Glue trade. This is when the market hits that number and just sticks to it. It often then creates an embedded reading. Again, you see it right there where both numbers, the red and the blue, they're called the K and a D line in the slow stochastic. The difference between the two is one is using 5 days of the formula, the other the 3. The one that is with 3 is red and it whips around the blue. But I have discovered, and I I did this years ago, that when they both go sideways over 80, it's one heck of a powerful signal. I used to be the type, oh, it's overbought, because the traditional way is, well, the market's overbought, be careful right now. Not the case. When this happens, it says it's getting even stronger. It also tells me again that there's a number under here, a moving average that I don't show you here in these, that the market, I think the pros will be aggressive buyers on until that pattern is lost. My subscribers see that as well. XLI. So what did we hit on the weekend? The high on Friday was 81.26, the upper Bollinger Band 81.14. That's where I think the pros took a lot of money off the table, not embedded, just an overbought condition. I haven't changed my opinion at all. I will wait and see what the market does. Overbought. I think the pros are jamming stops up there and saying it better keep going, otherwise I don't know what I want to do with it. On the energy sector, playing a hurricane. Been around this game 50 years plus. And you play for these things before they hit. And after they hit, it's often buy the rumor, sell the fact. And that's what you got right here. That's exactly what happened. So be careful. Is the trend up? It absolutely is. I think the pros are nibbling here at 30.78. They'd be wrong at 29.56. They're trying to get a higher market. When it reopens, this number is going to fall on them. It's a fairly dangerous pattern right here. Why is it dangerous? An uptrend has normally got a complete difference. It's not pointing down, it's pointing that way. It's trying to go up. This is a market that's corrected in an overall downtrend. That's why it's different. QQQ's got higher lows, higher highs. Again, not the Gorilla Glue trade. Not embedded either. It could embed this week. It's not there. So getting over that upper Bollinger Band, have a great time with it. It's not for me. In the EFA, the emerging markets, I have been saying I like these a lot. And the reason I like them is I believe the dollar's going lower. I believe that whoever gets into office in the United States is going to spend money at an unbelievable rate if they can. Afterwards on infrastructure, COVID-19, blah, blah, blah. And of course, how do you pay for it becomes a big issue. I think that when we look at us against other countries, that is an issue that people are looking at. So coming up here, that's fine. What were these markets? Undervalued also. They certainly didn't participate in the run that we had as a group to the U.S. Markets. But they're catching up. Now, the resistance, as I see it, missed it by 7 cents. 66.11's the upper Bollinger Band in an overbought area. Again, you're going to have to wait on these. Here's what's the negative for these ETFs and spiders. They are forced to wait to see 8:30 in the morning. That's how it typically works. Now, that doesn't mean you can't trade after-hour markets in some of them, but they'll be looking at the futures. So if the futures have reversed course down, you don't quite get to those numbers. You always got to keep that in the back of your mind. Gld Not Trending. You have a lower low, higher high in a market that just seems to be caught here, and it doesn't want to go one way or the other. That's what I'm seeing out of that. The gold miners. I think the pros bought the 100-day moving average of closes. I told you about this last week, 2 weeks ago, and they like candles. I've seen this, and I talked to different investors, and that's what they are. They're investors, and they're betting that the inflation scenario will come and that gold in the ground will be worth more money. If it's worth more money, whether it's out on the marketplace or not, they have a better value. I get it. I don't disagree with their long-term thinking. I'm not a long-term trader of that nature. TLT, big warning sign. The market now had on Friday an outside day down. What should you not do if you had an outside day down? There's a couple of things. You'd been in a downtrend. The first time you hit the Bollinger Band was right about here. You got right under it, right where I'm pointing. Then you fell to the 200-day. You couldn't get through that. Now you get an outside day down, and that outside day down was on Friday. You can see you closed lower, and you took out the high. Unless you go back through Friday's lows, the odds are strong. My rule of thumb is what it is, that you're going to make a run at the 18-day average of closes. Now, it'll be a combination of that number likely falling and ideally the price of TLT rallying a bit right here. FXE, getting to the point where you're overbought. Can you make it high enough to get up to that number? As I said, in the dollar index, I've already had reasons on my other videos, if you're looking at them, to do some short covering. I am bearish the dollar, but I think we're in an area that at any point you can find some footing, and I would expect to see some resistance at 111.73. Remember, we're looking to see how Brexit goes now. Mr. Johnson, the Prime Minister of the UK, is given until I think the 15th, the morning of the 16th, either do a deal or we're moving on, and everybody. This is the nature of the European Union. They play bluff poker until the very last. Go back and look. See if they can get anything done early on. Not their nature. Now let's see if they can do a deal at the last end of it. I've been thinking the deal would happen. We'll see if I get right or wrong on that as days go by here. I want to remind you that some of what I do is geared both for the ETF, the SPDR, and the futures trader. I put out 2 videos a day for them, subscriber videos. One at 5:40 in the morning. That one sets up what I said the prior afternoon in the ETF. Should you go with the trades we talked about on those ETFs or not? It really sets it up because so much is tied to the futures markets. Do you honestly think QQQ, DIA, SPY trade on their own, or are they looking at the futures? The difference is the futures trade 23 hours a day with broad volume. You don't get that in the SPDRs and the ETFs. They open up at 8:30 and everybody gets crazy. So I cover all this. I cover all this in the ETF. I'm up to about 37 charts now here, 40 on the futures markets, and I have it as a package. You can give it a try for $16.90 for 30 days. You don't like it? Go on our internet, just quit. It's that simple. You like it? You stay with it. How do you do this? www.iraepstein.com. Go to the word research. It's all explained, all the different packages we have. I'll see you tomorrow. Have a great day. Good trading to you.